Hello all, it's Rishi here. So it's 8th of June and today we'll be seeing how precise our entry should be while taking a trade. So a lot of you have asked me how I take trades with just 30 points as stop loss. So a lot of you know I take trades with 30 points as stop loss in my premium. So which is a minimal stop loss, right? Okay, so there are two things important in order to maintain a minimal stop loss. The first thing is you need to know the market trend. So what is a market trend? It's which direction the market is going to move on that particular day, right? So one is the market trend and next is the quick and precise entries. So your entries should be as quick and precise. But in order to follow this two, you need to know a very important thing, which is the base, which is the price action. So if you're not strong at price action, it won't work on either of the ways anyway. So price action is the basics. So we'll be seeing about that today. Okay. So first let's start with for example, let's say the market is going to go up. Okay. So like this and something like this market will be going up. So let's say it's at 10 and goes up till 50. Okay. So your entry should be within or exactly at 20. It should be below 20 or 20. In this case, you have a 10-point stop loss while a minimum target of 30, which gives you a 1:3 RR, right? If our entry is only about 25 or between 25 to 30, in that case, there is a huge space here, which is a 25 point, or at least let's say 10 also, it's a 15 point, whereas your minimum base here is 50, which is 20 to 25. So this is not my kind of setup. My setups will be, the entry will be somewhere at this level, which is at the bottom. Okay. And also I need space for the market to move. So I hope you guys understood this particular concept. The same goes with short trades too. Let's say the market is going down like this from 50 to 10. My entry should be either 40 or within 40, before 40. In this case, I'll have a 10 point, whereas here I can have a 30 point. So most of my trades are 1:3 RR, and the main reason for that is the quick entries. So in order to enter a trade, we need 3 confirmation candle. 3 confirmation candles. First will be a 15-minute confirmation, then a 5-minute, and then a 1-minute. Okay. But the most important is the 15-minute. This is the base. So let's say the previous day the market closed somewhere around here, this level, and then the market opened with a slight gap up somewhere around here. So let's say this was a strong move, and today we are planning to go for longs. So what should happen? The market opened with a gap up. It should either come down or it should go up. So here we need to know, if you're going for longs, where to take entry if the market comes down in the beginning, or where to take an entry if the market goes up in the beginning. So this is a two different scenarios. So let's take that the market is coming down in the beginning. So this we will be watching in a 15-minute time frame. Okay, so let's say the market is coming down. So in order to go for longs, we need some kind of support creation here. So that's what will be. Let's say there is some kind of strong support here. So this particular part should be confirmed in a 15-minute time frame. That's why this is the most important part of the trade. If we don't confirm this thing, then there is no use here. So this reversal is the most important. So once this is confirmed, then we can shift to a 5-minute time frame. We can see if this is a small loss, small stop loss, then we can take an entry straight at the 15-minute. Or if the space is big, then we wait for some kind of a retracement again. Then we look for a 5-minute confirmation here. Again, take a trade with this as a stop loss. So this is how the price action works here if the market comes down. Let's say the market goes up from here. Already it's up till here. The next day it opened and again it's going up. So in this case, this is a huge move. The market can't go straight line for very long. What we look is, we look for some kind of retracement. That too, not smaller one, but a bigger one. If some kind of small retracement comes into a range and starts going for sideways. If there is a good retracement here and then a support creation, then this is what we confirm in a 15-minute time frame. I hope you guys understood this particular concept. Let me say it one more time. The previous day market moved, gave a good move towards the higher side. The next day market opens not a big gap up, but a kind of a small or a flat also is fine. So if it comes down, then we wait for a support creation, which we look at a 15-minute time frame. We look for some kind of a bullish candle. Whereas if the market goes up, then it kind of reverses. This will act as a resistance. There are also chances that market might come down for that particular day, but that depends on the price action again. So let's see with some real examples. So this is a 15-minute time frame. Okay, so we can see there was a huge move for the market here, right? This is the huge move, and the next day the market opened with a gap up here, a very small gap up, and then came towards the low, filled the gap. So this is the support level we will be looking for. So we will be looking for market to come somewhere near this particular level, which the market did. So we look for some kind of strong bullish candles in a 15-minute time frame, which we got here, which is the 10 o'clock candle. See, this was not a strong candle, not a strong candle. Again, this is not a strong candle, but here this candle didn't break the previous candle low, also closed strong here. So once this candle is closed, we shift to a 5-minute time frame. So this is the 5-minute time frame. This is the new candle, the 5-minute candle, start of the new candle. As soon as the market, this candle started, it broke this particular levels. Again, then we shift to a 1-minute time frame in order to see the close of the candle. So this is where the market closed, which is a very strong close and very bullish. So our trade will be here, executed here, with a 30-point stop loss in the premium and minimum of 100 points target. So what we did here is, we first checked for a 15-minute confirmation, which happened here. Then we shifted to a 5-minute time frame, which is here. This particular level was broken in the beginning of the 5-minute of this candle. So then we shifted to a 1 minute time frame. We saw the close of the candle and we entered the trade. So it's just that simple, but you just need a practice here. So let's say the previous day also. So let's see here. So this is 5th of June. The previous day, the market gave a huge move towards the downside and took support right here. And the next day, the market opened kind of flat here and then started going towards the downside, right? So you see, this is where people lose money. The previous day, there was a huge fall. Again, a lower high is created and they think the market is going to go down further. So this is the place a lot of people lose money. Instead, what they don't see is this is a very strong support. This is a very strong support zone for the past a few years, I think. Just a second, let me see that. Okay, no, sorry. For the past 6 months. So if we have to go shorts here, go for short, then what should happen is the market should have broke this level, created a new lower high below this level, and then it will go. This is the structure, right? But what market did here was it came here, took support. This was a strong candle, again went up. Then we were looking for a higher low creation, which took place right here. So this is the opening of the candle, the first candle. The market came down. We were waiting patiently for a confirmation candle for the longer side, and this was a confirmation candle, which was the 10 o'clock candle. But we couldn't have took a trade at that particular level, and the reason is, see, this was a very big candle. Let's say it closed at 10:15. We shift to a 5-minute time frame, which is here. So this is a very big stop loss here. Obviously this would have took a 30 points. So what we do is we wait for a retracement and then again a confirmation candle on much lower side. So what we see in a 5-minute, there was a retracement and took support exactly at this particular level, and this was a strong candle. So this is where we could have entered the trade directly without checking the 1-minute time frame, and that is because it is already near the support levels. It has a strong base here, so it was a very good trade, and which is 30-point stop loss in the premium and 100-point of minimum target, which would have been easily took the targets here. So let's see with one more example too. So here, let's take this as the example. The market is moving high, and then there was some kind of resistance at this particular levels, and the next day the market opened at the gap down. And whenever there is a gap down in a buying market, which is in a bullish market, then it's a very good place to buy. So the market opened at the gap down and also gave a move towards the downside. So what happens is, then we look for some kind of confirmation towards the higher side, right? Because the overall trend of the market is high. So this is where the market confirms. The 9:30, the market takes support exactly at the low of the first candle, 15-minute candle. So once this was done, we shift to a 5-minute time frame, which is 3rd April. Okay, and we can get a market confirmed here. This was a strong candle. We enter the trade, or we can shift. We can check a 1-minute time frame also. So let's say 9:50. So from 9:55 So this is again a confirmation candle. There was a rejection and the market closed above the previous candle high. So this is where you could have took the trade, right? And the minimum target will be 100 points, and there is also the space for the market to move. See, you take the trade here. First, you have this big space already for the market to move to till the first candle high, and also this is the gap which the market will cover. Again, you have a space here. Let's say your target is a 10 or 20 point, then there should be the market to travel at least a 25-30 point. Okay, so I hope you guys got this 3rd April. So first what we do is we confirm in a 15-minute time frame a 9:30 candle here, which is confirmed. We take support at the low of the previous candle. Then what we do is we shift to a 5-minute time frame, and once the support was confirmed, we again see a 5-minute confirmation, which is the 9:50 candle, which broke this particular level, right? And once this was done, what we do, we again shift to a 1-minute time frame. So 1-minute time frame, 9:55. Yeah, this is the close of that 5-minute candle. What we do is we again wait for some kind of more precise entry. So some kind of retracement. The market goes up, again takes a retracement, and this is where we get our entry. And we enter here with stop loss of 30 points in the premium and a minimum of 100 points of target. So let's finish this with one last example. So what we do here is 23rd of Jan. The market, first thing is, what is the trend of the market? The market was in a huge selling trend. See, from here there was a huge push towards the downside. There was selling, then there was some kind of consolidation here, and again market opened and closed with a strong bearish candle. So this is where you mark the low. So what do? Do we enter the trade? We don't, because this is a very huge stop loss. So we look for some kind of confirmation in a smaller time frame. So this is 23rd of Jan. 0123. So this is the low of the 15-minute candle, and this is where a 5-minute confirmation is where we get. The market breaks the low, and this is basically very strong bearish candle. So we mark, which is 9:35. So we look for a 1-minute confirmation again. So then we shift to a 1-minute confirmation. So where do we get the confirmation here? So there is some kind of retracement, again a push towards the lower side, but still this is not a strong candle. We need it to be below this. So this can be a strong candle, this or this. So either of these three is a strong candle, right? So we can take our entries anywhere near here. A stop loss will be 30 points, and then see the move of the market. We had space for the market to move somewhere here, or at least here, which was the previous support levels, or here, here, and here. And as expected, the market took our profits as well. So I hope you guys understood the basics of it. What we do is, first we confirm a 15-minute, then we go, once a 15-minute is confirmed, either a support or resistance is confirmed, we go to a 5-minute time frame, and then we go to a 1-minute time frame, right? See, there are times where you can take the entry as soon as the close of 15-minute candle as well. This is the main, like this is the base, Once this confirms only, we shift to a next time frame. But there are times where you can enter your trade once the close of this candle, but you have to make sure that your stop loss is less. So if your stop loss have to be less, then the candle size also should be less. It shouldn't be a very big candle, or not even the medium size. Even a medium size candle in a 15-minute has a very big stop loss, which is more than the 30 points. So if it's a very small candle, confirmation candle in a 15-minute, then you can enter the trade, or else you shift to a 5-minute or again a 1-minute. So I hope you guys got it. So the main thing here is not about these time frames of this. The main thing is price action. You need to know how market moves. You need to know if the market is going up, how does it go up? If it's coming down, how does it come down? Also, you need to identify if the market is going to stay sideways or not. That you can identify from the speed of the market. So there are a lot of things for this. It's not just simple to take a trade just by seeing 3 candles. There is a lot more to it, but with practice that will come to you as well. So I think that's it for today. Hope you guys understood. If you guys have any doubt or anything which is not you didn't get that much clarity on this, you can reach out to me. So that's it for today. We'll see you on different video. Thank you.